Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages tucked away in corporate filings. Today, we're diving into a filing from Regen Biopharma Incorporated, and let's just say they've been busy issuing shares, like they're handing out party favors, which might have some investors scratching their heads. We'll break down exactly what is happening and what it means for the company. Before we get into the details, if you like these no-nonsense breakdowns of corporate action, make sure you're subscribed. Also, consider joining our Discord community, linked in the description below, where we discuss these filings in real time. So what we have here is a Form 8K filing. Think of an 8K as a company, S way of saying something important just happened, and you need to know about it right now. It is like breaking news for investors. This particular filing is from Regen Biopharma Incorporated. Briefly, they are a company operating in the biopharma space, and as the name suggests, they are likely focused on developing and commercializing new pharmaceutical products or therapies. The main event here, and it is quite a significant one, is under the heading Unregistered Sales of Equity Securities. This tells us the company has been selling its own stock. And importantly, they are saying these sales did not go through the usual public registration process with the securities regulators. Let's look at the specific transactions. On the 15th of September of 2025, Regen Biopharma sold a whopping 3,320,000 shares of its common stock. They received $33,200 for these shares. Now, that is an incredibly low price per S-share, a little over a penny per S-share. This indicates it was likely a private placement or sale under specific exemptions from public registration. They mention these sales are being made under Regulation A. Now, Regulation A is a way for smaller companies to raise capital from the public without the full expense and complexity of a traditional IPO or initial public offering. It allows for some exemptions, but it's still a way to get shares out to investors. The key takeaway here is that these shares were sold directly to an investor, not through a public exchange like the New York Stock Exchange. Just a day later, on the 16th of September, they did it again. This time they issued 1 million shares for a mere $10,000. Again, that works out to just a penny a share. This pattern of issuing a large number of shares for very small amounts of money is a pretty strong signal about the company's current financial situation and its strategy for raising capital. And they weren't done. On the 18th of September, they sold another 1,500,000 shares for $15,000. This is a total of over 5.8 million shares issued in just 3 business days, all for a combined total of $58,200. The fact that they are filing this Form 8K within the required timeframe shows they are staying on top of their regulatory reporting, which is good hygiene, so to speak. Let's talk numbers. We're really not seeing detailed financial tables in this specific 8K, which is typical for this form as it primarily reports on material events. However, the numbers we do see are the share issuances and the cash received. When a company issues shares like this, especially at such low prices for large blocks of stock, it can have a dilutive effect on existing shareholders. Dilution means that each existing share represents a smaller percentage of ownership in the company than it did before. If you owned 1% of the company and they issue millions of new shares, your 1% ownership stake shrinks unless you also buy more shares. This method of raising capital is often used by smaller companies or those in early stages or facing financial challenges. They might be using this to fund operations, research and development, or to bridge a gap until a larger funding round or revenue stream is secured. The phrasing "proceeds will be utilized for working capital" is standard and means they are using this money for the day operations of the business, like paying bills, salaries, and other immediate expenses. From a shareholder's perspective, seeing millions of shares issued so quickly at these prices raises questions about the company's valuation and future prospects. Is this a sign of desperation or a strategic move to get just enough cash to reach a critical milestone? Without seeing their balance sheet, cash flow statements, and income statements, it's hard to say definitively. However, the sheer volume and low per share price suggests they might be struggling to attract larger, more traditional equity investments. What does this mean for Regen Biopharma? It indicates they are actively managing their cash situation by issuing equity. Buying its own shares, especially at extremely low prices, can be a sign of distress or a need for immediate liquidity. From an outsider's view, it's a clear signal that significant cash is needed for operations, and this is how they are getting it. The question is whether the capital raised is sufficient to move the needle on their business objectives, and whether the increased share count will hinder future fundraising or stock performance. Looking at the broader picture, companies in the biopharmaceutical sector are inherently risky. They require massive investment in research and development, and the path to bringing a drug or therapy to market is long, expensive, and fraught with regulatory hurdles and scientific uncertainty. A company like Regen Biopharma will need substantial capital to navigate these stages. This filing tells us they are actively trying to secure that capital, though the method used here is certainly noteworthy. In conclusion, Regen Biopharma Incorporated has filed a Form 8K detailing several recent unregistered sales of its common stock. The issuance of over 5.8 million shares for a total of $58,200 at a price of about a penny per S-share points to a company actively seeking to bolster its working capital through equity sales. While these transactions are done in reliance on regulation and exemptions, the low price and volume suggest the company may be facing significant liquidity needs. This strategy can be a double-edged sword for existing shareholders due to potential dilution. What is your take on these share issuances and what they signal for Regen Biopharma's future? Let us know your thoughts in the comments below. If you found this breakdown insightful, please give this video a like and subscribe for more corporate deep dives, and don't forget to join our Discord community for more real time analysis as these filings come out. Thanks for watching, and I'll see you in the next decode.